changes which government have already done. We can see some changes on the GSTN portal. We have seen some notifications which have come up, and there is a very bigger impact on the businesses also. So it's very important for all of us to understand about those changes and how this is actually impacting our businesses. But before we even start our today's session, I just want to first see if you all are able to hear me or not. So you can just say hi on the chat box if you all are able to hear me. Great. So it seems like everyone is able to hear me. So with this, we'll just start our today's session. And we have with us CA Abhishek Rajaram Sirji, who is a renowned tax expert with us. And he's our today's panelist. So he's a fellow member of ICI, qualified in 2006, and holds a master degree in commerce. He has more than a decade experience in litigations in indirect taxes like VAT, service tax, excise laws at various appellate forums. He's also a speaker on VAT, service tax, and GST, and deliberated many seminars and webinars on various CA, CPE, study circles, Taxation Bar Association, other association web portals like CA Club India, Study Cafe, Clear Tax, and all such portals. So with this, we welcome CA Abhishek Rajaram Sirji.
Hello to everyone.
Great. So now we'll just start our today's session, which is about important GST changes which are applicable from 1st January 2022. Now, so I think the bigger and the important change is to section number 16. So I will just try to start from there itself. So, sir, like what is the amendment to section 16 and how is this actually going to impact the businesses?
See, Finance Act 2021, their clause 109 has amended this section 16, and they have introduced section 16 to double A. With this, what they are trying to say that till date we all know that our ITC was linked with the percentage of what is shown in 2A, GSTR 2A. That was for the quantification, and for the qualification we used 2B. So in from November 2019, we were allowed to take 120% of the eligible ITC, or whatever was shown in whatever was the eligible, or 120% of the 2A, whichever is lower. From 1st January 2020, it was reduced to 110%, and from 1st January 2021, it was reduced to 105%. Now, there were issues with respect to Rule 36 sub Rule 4. Some have said that the section is not applicable, section has not been notified, you have notified the rule. So, therefore, government has thought that let's remove all the issues like this, and they have introduced section 16 to AA with the Finance Act 2021. Now, what this says, and this has been recently notified with the uh, notification number 39 dated 21st December, and Rule 36 of Rule 4 has also been amended with notification number 40 2021 on 29th December 2021. Now, this says this 16 to AA, the clause says that the details of invoice or debit note referred to in clause A has to be furnished by the supplier in the statement of outward supplies, and such details have been communicated to the recipient of such invoice or debit note in the manner specified under section 37. So now they are saying that whatever credit you would be getting would be based on 2B. So that is another notification by notification number 40, which is visible, communicated through IFF or GSTR1, and corresponding tax has to be paid. So when we talk about manner is specified in section 37, that is, they are talking about the returns GSTR 3B. So if IFF has been filed, taxes has been paid, then only you will get credit for the same. Now, what this has done to the business, that it would be forcing everyone to comply with the provisions. So till date, what we could have been having, we were getting credit of 105%, 10%, or 20% extra, even when our vendors or suppliers have not shown their filed their GSTR1 or IFF. But now it would be one-to-one match, and with notification number 40, it has been linked to GSTR 2B because that is covered under rule uh, sub rule 7 of rule 60. So 100% linkage. So time has gone for 120%, 110% or 5%. Now it would be we would be reconciling everything, and it is going to impact the business. See, it might impact negatively also because a business will not get credits. So it could be possibility that I had paid to my vendor and he has forgot to file his IFF because that is not mandatory, or he has not filed his GSTR1, then I would not be getting my credit. So my working capital would have been blocked. It could be other way around also, that a business would stop GST payment of the vendor. They would say to a small vendor that first you file IFF and GSTR 3B. When your credit is visible in my books of account or 2B, then only I will make payment to your for the GST portion. So this could impact both sides. Credit blockage or cash flows might be negatively impacted, but this has some benefit also. It would bring more compliant society. Everyone will be forced to complete their compliances on time, and it would help in reducing reconciliation. So when everything is visible, then we would not be required to reconcile. And the problem with the people were that they don't have a mechanism for reconciliation. It goes on ad hoc basis. What I have practically seen, we do reconciliation quarterly, half yearly, once a year, and when we reconcile also for unreconciled, we used to make calls. Maximum we drop some email, but that is not systematically. There are no steps further. So when we have make the call to someone that your invoice is not visible or my credit is not visible, then what would be the second step? If he doesn't reply within 3 days, within 5 days, what next step we are going to take? So this would help us reorganize our things and make it more say systematic, these kind of things, because we are not going to get ITC a single penny extra than what is visible in my 2B.
Thank you, Abhishek sir. And I think you have beautifully explained the changes and also like what is now important and especially how it is important and how it's changing the business's structure. So maybe with this only, I would like to understand from you because you already explained that here, whenever we are talking about the section 16 and when we talk about the notification number 40, and even when we just look into the rule number 60, subsection 7. So all of this is like looking after the 2B, especially they're focusing on GST at 2B. So the now main question comes in like, do we even have to look into GST at 2A or should we just stick ourselves to GST at 2B when it comes to reconciliation?
See, when we go and we give a harmonious interpretation for section 16 to double A and this rule 36 of rule 4, now we have to link where our credit is linked with 2B only. Now there is no role from 1st January 2022 for GSTR 2. We have to link our credit, and therefore we have to make all the reconciliations, whether it is with our books or the actual credits which we want to have with 2B only. But there are two opinions. One says that 2A will not be visible after January 2022. We are sitting in January, so I don't know whether after 13th of February, whether we would be having 2A or not. But if I say 2A is visible, then my credits are not linked with that. But that could help us because it is a dynamic statement. So 2B is a static one. Once an entry has been punched, later on any changes would not amend that one. But 2A will help me understanding what my vendors are doing in this month. So this can be add-on thing for my reconciliations, for my MIS. So, for example, if um, someone has filed a return after September for previous year, So that is not, so the say in October or November, then there would not be any credit coming into my 2B, but that entry would be coming in my 2A. So for understanding, for deeper analysis, we can use 2A, but legally it will have no validity from January 2022.
Right. So now we just understood like when it comes to claiming the ITC, we should always refer to GST 2B, especially from January 2022. But maybe two-way, whenever we look into GST at two-way, it's a kind of a dynamic statement, and we can even see the real-time transaction. And an example could be my supplier, who is an e-invoicing supplier, who are required to generate the IRN number, because now they are going to generate the IRN on the daily basis. So you will be able to even see this information in your GST at two-way on a kind of real-time basis, which is usually T plus two basis. So you will be able to see this information. So this may help you in taking decisions like whether you even have to block their GST payment. So if you see, okay, this vendor is not compliant at all, this is particular vendor is not even uploading document. So you can take certain decisions of maybe blocking GST component so that you may just pay it only when this particular supplier uploads the document, which may help you in your working capital optimizations, which may help you in making sure that your suppliers become compliant and you don't suffer at the future. So this is some of the way you can always mix and match. And when it comes to claiming ITC, go with 2B. But whenever you are making the payments to the vendor, which is more on maybe a weekly basis or maybe 15 days or 30 days, depending on the business structure, so you can take such calls. But now moving to our next important question, because we just talked about the change, which is section 16, and as Abhishek sir also mentioned about the business impact, he mentioned about that there could be some challenges. So maybe I would like to ask this question again, like what kind of the challenges the businesses are going to face, and like what is the solution for that? Like how can I optimize my working capital, especially because of this clause which has been entered from January 2022?
First, Ravindra ji is saying that my voice is not visible. Oh, sorry, audible. I hope now I am audible, Ravindra ji. So now, challenges. See, GST law, many people think that it's a conceptual law. My firm belief is that it is not a conceptual law, it is a procedural law. And if you don't follow any of the procedure, then either your ITC would be lapsed or your output tax liability would be enhanced. So the question is how to optimize your ITC and what are the challenges in optimizing this ITC. So best method is buy a clear text software that would help us go more techno friendly. If not clear text, then whatever, go for technological changes. Now, the business has have additional responsibilities now while claiming ITC because this benefit of 20%, 10%, 5%, it has been reduced to 0% now. Whatever is not visible, you are not going to get it. Now, these challenges, the fresh challenge which has come to us, can only be addressed by technological adaptations. Henceforth, ITC reconciliation would be more dynamic. When we talk about the dynamic, it should be real time. It can be per payment cycle. Before making payment to the vendor, you could cross check with your GSTR 2A whether his all previous invoices are visible or not. Otherwise, also, with the help of 2A, you could make your ITC reconciliation more preferably, I would suggest, for weekly or fortnightly basis. If possible, if the company is big, organization busy, then you can have more than once also this weekly limit. See, the routine one which we are handling the way, making reconciliations quarterly or half yearly, that is not going to help us with these changes. See, when we talk about ad hoc reconciliations, then what we do a phone call, messages, or emails, but that is not linked into our ERP system. We are not linking it into ERP. Now the time has come, we have to merge these compliances or communication into our ERP system also. And we have to talk to our non-compliant vendors on a real-time basis. We can hold total invoice due or the GST portion of the invoice due. With the ERP, we can track all of the two-way and whatever the invoices we are having in purchase book, whether the ITC is available or not. The challenge is if you don't take these kind of steps, then you are going to lose. You might lose substantial payment of your ITC, and you would be required to make that again cash payment, and it would be against your. It will negatively impact your working capital. The sooner you act, it would be optimal for your ITC claims. Else, it would negatively affect your working cash flows and it might impact your profitability also. And see, when we hold some payments for our clients, then how I have to show in my books of account? That is also a challenge. How I will track those payments? So if a vendor, I have to make 118 rupees payment to a vendor, I had made payment of only 100 rupees. I'm ignoring taxes. So the TDS part right now. So I have stopped this 18 rupees. But why I have stopped? So my suggestion could be, you could create your own fancy names, that you could transfer this 18 rupees to hold GST until matched account. Then you can have a track that this party 18 rupees has been hold because the GST or ITC has not been matched. And once it appears in your in your GSTR 2B, then you can release that 18 rupees also. And time has gone where you matched it on a gross level. Now it would be invoice level matching of each and every payment. So this is again a big challenge for the businesses. Your working could enhance to a substantial level, but the benefits would be very high if you match on this. Now, whether we are ready to match these things, and also when things are not matched, then in the GST portal itself has a facility that you can communicate to any vendor, making it that this was the invoice, you have not made payment for this, or this is the invoice which is not visible in my GST 2B, then those communication can also help you safeguard you against further future claims by the department. So these are the my feeling is that reconciliation is going to play a big role. Reconciliation and also the follow-ups. There is no use of reconciliation if you don't do follow-ups. And what are the further steps? Say if we have mailed to the accounts department in first, and if they have not acted for next 3 days or 5 days, you have not got any reply, then you have to escalate things. See, you would be marking their MDs or directors in the reminder mails that this action has not been taken by your accounts department. We are yet to receive any positive reply from them. These could be things which can change the business dynamic or the accounts and finance department.
Thank you, Abhishek sir. So I guess you have already like explained very beautifully about the challenges and also how to even overcome the challenges. And two important part is your one obviously the reconciliation. You have to do the timely reconciliation, and along with that, the vendor communication also becomes very important because if you don't do the follow up, it's a kind of like the amount is just lying, right? So you are not able to claim that amount unless you yourself is just blocking their payment before even releasing that payment to the vendor. But there also you have to be very sure whether that person is an MSME or not, because then you also have to deal with the other compliances which are required where you are required to make the payment. Along with this, it's also really become very important that are you making sure that the contract which you have with your vendors, so do you even have a specific clause in respect of GST? Can you actually hold the payments and not? So it's really very important. Then in case let's say your supply is not compliant till the next year September month, and you now after that you cannot claim ITC at all. Right? So and even if you have not made the payment, is it like you it becomes a debt loss or not? So all of this has to be looked after. This should be done properly and do a proper reconciliation once, even when you're doing like a every month recon, it becomes very important that you do an annual reconciliation also after you're done with the March filings. so that whatever is left off, you can just make sure that your supplier just file it, and you should not wait till like the next year September month, because even after that if you do something, it's a kind of debt loss. Your supplier now don't have any rights. He cannot even upload document, he can't even amend the document, because sometimes we may notice that maybe supplier had filed returns, he was a compliant supplier, but he has mentioned a wrong GSTN. So instead of writing your GSTN, he has mentioned some other GSTN, but he was not aware about that, because whenever he looks into his turnover, it was correctly mentioned, there was nothing wrong. But the problem was that the GSTN was wrongly mentioned. So unless you inform that particular supplier, he don't even know about that particular issue. So all these things should be done properly. And now I can actually see one question which is actually relevant to the discussions which we are having right now, and this is from Praveen, who is asking, in case of supplier who have filed GST1 prior to 1st January 2022, but he will be submitting the recipient invoice in Feb 2022 due to approval process and certain conditions in PO. His invoice are accounted in Feb 2022. In this case, how we can claim the credits is GSTF1 filed by supplier will appear in 2A prior to Jan 2022, but the same will appear in 2B in Feb 2022.
So I am unable to understand the question that if he has filed GSTR1 in maybe in December for the December month, then why this will be visible in February?
Maybe I can just I which I understood from like him. So his main question is there was one particular document, and let's assume this document is for one particular month, and assume that this is for January only, and the document issued in January, but maybe the person have received goods in the next month, which is Feb. So supplier had filed on time because he had issued the invoice in January itself. So when we look into your GST at 2A, this person is able to see this particular document in 2A and as well as 2B of this January month. But since this particular thing was maybe received in the next month, which is Feb, so that person was not eligible to claim the ITC while he was filing the return for January month. Now, next month, Feb month, when he actually have accounted this particular document, which means when he files for the Feb month return, this person will be eligible to claim the ITC. But in Fab GST 2B, whenever he looks into this document will not be available. This document is there in only the last month, which is
That's right.
January month. So that was the main question, I
So
guess.
then
So
he is allowed to claim credit in the next month whenever all the four conditions are satisfied. So you mean to say that as per 16.2, there are four conditions. You have received, you have tax invoice, you have received goods, he has filed return, and he has made payment to the government. So all three were satisfied in January month. The fourth condition, maybe the sale happened on 31st of January, and he received goods in on 1st of February. So there is a difference in claiming the ITC, and it was shown in previous month GSTR1 or GSTR1 for the vendor, and his 2A and 2B is reflecting in January month. Yes, he should claim in the next month when he completes all the conditions, and there's no issue. You can make a reconciliation with yourself, and whenever a notice comes from the department, it will not be a notice, it will be communication, because we have a pre show cause notice consultation, pre litigation concept in GST. So then you can reply that because these were the conditions and I was not able to fulfill this, and therefore I am claiming this from the previous month backlog, which I have not claimed in the previous month, which I have claimed in the this month. There is no issue. You have to claim when all the conditions are satisfied.
yeah, so I think, hope Praveen, this answers your query. And so, as per this, you can always claim the ITC. There will be discrepancies in the Fab month. So, where you will see that in GST 3B, you have claimed more as compared to what is available in GST 2B for the Fab month. But there is no problem there. On the government portal, even when you file your GST 3B, they will show you some warning message, but they will not block you. So you can always go ahead and claim ITC, which is an eligible ITC. And see, one important thing we should always keep in mind that while we are doing proper reconciliation, we are claiming the ITC, just keep a track of the document against which you are claiming the ITC. So in 3B, there is only one figure which is going to be reflected. So you will just say, okay, this is, let's say my 1 lakh is an ITC for which I was eligible, and you also claim that. but make sure like every month whatever you're claiming, you also have a supporting documents for with you. You know that these are the document against which you have claimed the ITC in this particular month. So even in future when the department raises a notice and they say, oh, why you have claimed extra and all that, you have a proper document with you. You can always reply with the documents that, hey, this is the against this one, and I know that this is already there in the previous month, so that you don't face any problem in future. So it's a more on just taking a precaution. So you cannot stop notices. So you may receive it, but you can always reply it so that you don't get stuck with interest and all.
One thing that I had also used the incorrect word. There will not be a notice; it would be a communication from the department.
Right.
And if you are running a business and you feel that you will never receive a communication from the department, that is not possible in the complex environment in which GST operates. You might get a communication from the department and you will communicate in reply to the department, and this was my eligible ITC and I had claimed it. And Praveen ji is saying that we have to make a cumulative reconciliation. Yes, in this case, that whenever you receive a communication, you would be required to reply in the cumulative communications.
Right. So I can see there's a similar question from Shushil and Govinda Raju, and I think we have already answered. Still, in case Sushil or Govind, you have the same query, you can again ask us. But I think this has already been answered. But yeah, we will be happy to like reply and explain again. So you can just put on a chat box still if you have certain doubt in relation to this. So I with this because we were just talking about the amendment, the GST amendment, which was applicable from 1st January 2022. We know there was another important change which came into picture. So I would like to understand this from Abhishek sir. So sir, there is a change which is related to the recovery in case of differences in GST 1 and 3B. So what exactly this change is and how this is going to impact the businesses?
See, the chain was very simple. It was further complicated by a newspaper headline which said that taxman will knock your door and recover without communication. This is not correct. Uh, Whosoever has written that article or the news item is not familiar with GST laws. That's for sure. See, there could be reasons for your differences in GSTR1 and GSTR3. The government was targeting those who are issuing fake invoices or who are issuing excess invoices, passing on excess credit in GSTR1 and not paying taxes in GSTR3. Now, for targeting those, what changes have been brought? That for GSTR1, which they have said that whatever amount is there, it is an admitted amount. It is you have admitted it, and department can proceed for the recovery of the same. Now, recovery, as you understand in GSTR, recovery can be made only section 79, and before recovery, assessment has to be done as per section 73 or 74. 74 is for fraud cases, 73 is for genuine errors. Now, what changes are there? That first department will shortlist you, and I feel that because you have disclosed some income in GSTR1 and you have made short payment in GSTR3B, then this is the case for section 73, not for 74, because this is based on your own assessed one. Then you will receive a notice, or I should not say notice, a communication, a statement. The word is statement. Statement would come from the department in DRC 02, and they will ask you that this is the recovery thing. This you have mentioned in GSTR1. Your tax liability in GSTR3B is this much. So for the difference, why we should not issue show cause notice, why we should not go for recovery proceeding. Then this is the pre-litigation stage, and you have to reply to those. And it's not that on 24th or 20th you have filed your return and 21st they will send you notice. It's not going to happen. They will give you some time. Then they will send you this communication, and then you have to reply. If they are satisfied with your replies, they will drop and they will never come with show cause notice. If they are not satisfied with your replies, or your communication, then a show cause notice would be issued, assessment would be done, 73 or 74, whichever the case might be, and then recovery proceedings will come. So it's not going to happen that one day you have filed an incorrect return and then tomorrow someone would come and for recovery agents would be there. It's not like that. The articles picturized such that if you file something wrong, then a sort of department recovery agents would come and snatch your money, or they provisionally will block your say provisionally attach your bank account. That's not going to happen. And if you go through these sections 79 and 73 and 74, then it would give you a 3 months time before your notice would come. Or and these notices could come into 3 years or 5 years time, 3 months and 6 months prior to completion of 3 years and 5 years. These are linked with your annual returns you get. So there is a long time, and you might receive a communication, and then department came with a circular also, which shows that these are the cases where you could have done a genuine mistake. So, for example, in GSTR1, mistakenly, my previous month sale was 10 lakh rupees. I punched mistakenly 10 lakh rupees, same sale for a party. Actually, my sale was 8 lakh rupees and I paid taxes on 8 lakh. So, 2 lakh rupees extra shown in my GSTR1. Now, tomorrow, 2 lakh, the taxes on 2 lakh rupees is not due. I would rectify this in my next month. So the best working position, what I am saying is, if you have shown excess in GSTR1 and correct amount in GSTR3B, make a letter and communicate it to department. Suo moto, you communicate to the department and say that we have did a mistake. It was a bona fide mistake from our part, and we would correct it in next month. And then, so please don't go for any recovery mechanism in 79 or 73, 74. This is the best way to communicate. And in communication to the department, never ask that what I should do. Never ask their view. They will never give their view. Always conclude it that I feel that this is my view. I am going to conclude this as this way. Now, if there's anything contrary, then you can communicate. This is the best way, best practice which I can suggest at this moment.
Thank you, Abhishek sir. And with this, like, because also you talked about the provisional attachment, right? So we'd like to understand from you, like, what is this provisional attachment and when the same is actually applicable?
See, provisionally attachment are the cases where department has some amount to recover from you, and they feel that that you are going to sell your assets, you can abscond, and they will not be able to recover that amount. Then, to safeguard the interest of the revenue, they might provisionally attach your bank account and other things. Now, for these things, for blocking or seizing your assets, blocking your bank account, first there should have been an inquiry, investigation, or assessment. Then, post that, there should be an amount to be recovered from you. Then there should be reasons to be recorded that revenue will not be able to recover the amount from you if they allow you to continue like this. And in this case, that there should be reasons to be recorded that you are going to run away with their money. Then only they can provisionally attach. It's not going to happen that once I file incorrect GSTR1 and I have filed an correct GSTR3B, then tomorrow they are going to freeze my bank account. This is not going to happen. Second, various high court decisions have said that they cannot freeze your CC account or overdraft account because that is the bank has to recover money from you. You don't have to take money from the bank account. Then this provisional bank account, Section 83 will come only after the proceedings for assessment, Chapter 12, or inspection, search and seizure, Chapter 14, or there has been demand and recovery has been freeze, Chapter 15. So, to and superintendent or lower authorities don't have the power. These powers have only to be exercised by the commissioner. So, superintendent need approval from the commissioner, then only to protect the interests of the revenue or the government, then only after recording the reasons. So there are two things: reasons to suspect and reasons to believe. There should be reasons to believe, and then only the commissioner will approve this provision attachment. So it's not going to happen in every case. The reason should be very sound reasons, and these can be exercised even after regular assessments or regular search. These could be done, but after due recording of the reasons. And those recording of the reasons should be with certain condition to be satisfied. Then only they can attach your things. It's, it's not very easy. No one is going to risk his chair or his job by saying, see, 20,000 is the amount to be recovered. Please, there's a it's going to be on substantial amount.
Thank you, Abhishek sir. So now we just understood about this provisional attachment. We also understand about like, especially when because I think there was a lot of huge and cry in the market where they were like, okay, I genuinely make a mistake in my GST one, and now I was not able to amend because of X Y Z reason. So what to do? Will they just attach my bank account, or what will actually happen? And I think sir has already explained like this is not the case. This is not how this happens. So there's a proper procedure. They will give you time for even correcting your mistakes. So all of this will happen. With this, like because there is another thing which we keep on hearing, and which is mainly in relation to the seizure and confiscation of goods. So I would like to understand, sir, from you, like what is this change which is related to the seizure and confiscation of the goods and the conveyance in transit?
See, section 129 and 130 has been amended by this year, and section 129 has been dealing with section 130. The 130 is for confiscation. The 129 has been dealing to make it a separate proceeding in itself. The first major thing, the penalty amount has been increased from 100% to 200%, and the option for getting detained good release provisionally has been removed. Also, there was an option for getting furnishing bond security for releasing goods and conveyance has been removed. Now you have to pay taxes. Uh, Seized so then goods and transport vehicle was interlinked. Now there are separate provisions for transport. So the conveyance can be released on payment of penalty or rupees 1 lakh, whichever is lesser. So the maximum penalty for the conveyance has been up to 1 lakh rupees. Now, one more thing, that in case you want to file an appeal, then you have to pay mandatorily 25% of the penalty amount. This has been done. Also, see, there were no details of days were not prescribed in the previous period. So now, period for issuance of notice is 7 days, and passing of an order is 7 days, and the taxes has to be paid within 15 days of issue of notice. So max 7 plus 7 and plus 15. So you have to make payment, or you have to file an appeal. And while filing an appeal, you have to make mandatory 25% of the penalty amount. But this is a beneficial provisions, though the penalty amount has been enhanced to double. And in case the owner doesn't come forward, then penalty could be 50% of the value of goods, or 200%, whichever is whichever is higher. So this is one more thing which has to be dealt with. Now, if the owner doesn't come forward, then previous penalty was the applicable tax or 50% of the value of goods. Now it is 50% of the value of goods or 200% of the tax payable, whichever is higher. And in case of exempt goods, earlier it was 5% of the value of goods or 25,000, which is same now also. The only thing which has changed is 100% of the penalty has been increased to 200%. So this is a thing which has enhanced your penalty provision. And while filing appeal, you have to make a mandatory payment of 25% of the penalty. That's it.
Thank you, sir. And Abhishek, I can see some of the queries which has been asked by users. So one is Govin. He's asking ITC mismatches between GSTR 1 and GSTR 2A. What is the treatment? Okay, I think it's one or it's books, but we had already paid to the supplier with tax, but supplier has not yet filed in GSTR 1, and I want to know who is responsible.
Um, See, for filing GSTR 1, he is responsible because you are taking credit, claiming credit. You are responsible to follow all the conditions. There is a debate on ITC whether it is a procedural benefit or it is a right to you. If you consider it as a right, then GST's or laws doesn't say like this. GST law presumes it as a procedural benefit provided to you. And some of the procedures are to be followed by you, some of the procedures are to be followed by your supplier or vendor. Now the questions come whether you have control on your vendor or not. Can you force him to file his return on time? Can you guarantee that he files correct GSTR1? This could also be a mistake. See, mistakenly he mentioned incorrect GST number. Possible. Mistakenly he showed B2B as B2C. It could also be possible. There are so many things which could have happened. But again, law says that if you are claiming credit, then you have to ensure all the conditions are complied. And therefore, GST laws believe that this is a procedural benefit. We as tax professionals can only explain you the law. For these kind of issues, we are not the right authority to answer it. We can only explain the law provisions.
So I can see there is another query. This is from Rohit, and he's asking how to deal with ITC in respect of imports and RCM. In case of RCM, supplier of services reported the same. However, the invoice not booked in the same month, so we have to pay the interest if we book the invoice in the next month. And how we will match the same with in respect of the ITC of imported goods and services.
Now that's a challenge, that's a procedural issue, and because you have not booked in the same month, then see, you have to book within 30 days. If you have benefit of that has been issued, say on 7th or 10th, then 30 days comes in next month, then maximum you can save 1 month interest. That's the only way. But if interest liability is there, then you have to pay. In fact, when we think about the litigation part also, then section 73, 74, 79 says, when you read all three sections, then the inherent thing what they say that even if interest is not communicated in the notice or in the order, then also it becomes suo motu due. Even if not communicated in an order, then also it is due. So for interest part, law is very clear that government wants it if you have done a mistake. So you cannot avoid it.
So I guess Rohit, this answers your query. And in respect of the other question, I think which is related to import of goods and the import of services. So if you ask me about the import of goods, especially I can also see the same question which is from Rahul also. He just said like ITC against the custom duty was paid in December, but it was not showing in the GSTR 2B. Can I go ahead and claim this ITC in December 2021 itself or not? So, just maybe answering to this special query when it comes to import of goods. So, first thing, when we look into this section 16 also, right? So, this is not mandating you for the import of goods part. So, first thing is like It's not important for you that this particular information should be reflected in your GSTN 2B. So if you have fulfilled all other conditions, which is that you have received the goods and all other conditions which we have, and this is not a kind of a block credit and all. So if you have fulfilled all such conditions, you can always go ahead and claim the ITC in your GSTR 3B. So you don't have to worry about whether it's coming in 2B or not. But just to safeguard yourself, like government, the GSTN, they have already come up with a facility where even if certain information where you have already paid this custom duty and you have paid the IGST at the time of filing the bill of entry, so and this info is not coming in your GST 2B, you can always search for that particular bill of entry and it will auto refresh and will be reflected in your GST 2B. So that facility is already provided, so you can always make use of that particular facility, so that at least just to safeguard yourself. But again, just answering your query, which is like you received, you paid some taxes also in December month, so you can always go ahead and claim the ITC also in the same month. So I think I can see there is another query from Rohit, and he is asking in respect of outward liability. He's saying that they are generating the e-invoicing, and but the same is not reflected on the GSTN portal. And we also have to do the iron reconciliation as well. What will be the impact if we generate the iron of this particular document in the next month? Will this invoice be reflected in the same month or in the month of the generation of the item number? So,
I don't understand if they have issued a e-invoice and IRAN number was generated. Why it is not reflecting in GST?
so maybe just one of the case which we have seen practically. This usually comes in when you generated the item at that time. The GST number which you have used, the customer GST number, it was a kind of valid GST number. But at a later stage, right, on the maybe after 2 3 days, this particular GST got cancelled or maybe suspended, actually not cancel, I would use the word suspended. So in that particular case, this info was not getting populated on the GSTN portal. So though the item was generated, but when you just see your GSTN portal, this document is not reflecting over there because this particular the GSTN was suspended from the backdated. So whenever this case comes in, this info does not come on the GSTN portal. And if you ask me, Rohit, like, do we have to show this or not? Like, because ultimately you have supplied it, so you have supplied to a customer. It's just like at a later stage this got cancelled. So even if this is not coming in the GST portal as a B2B document, and even if you try to now upload, just add a particular document as a B2B document, since you have generated the item in this particular case, you will not be able to add that on the GSTN portal because it will throw an error that this is a kind of invalid or inactive GSTN number. So you just have to report it as a B2C transaction, and you will just in the same month you just report it as a B2C transaction and just discharge your liability in your GSTR 3B. So that is how you have to reflect it. But I can see there is one more question from you, which is that you have generated the IRA number in the next month. So which I could understand from you correctly is like, for example, there was a document dated 1st January, but instead of generating the IRA number on 1st January, you generated on 1st Feb. So that is what you have done. So you have not generated in the same month. So your question is whether this will be reflected in the same month GSTR 1 or it will be reflected in the next month GSTR 1. So which is like whether it will be reflected basis the invoice date or it will be reflected basis the item generation date. So the answer is this always get reflected basis the invoice date. So if you have not filed the January return period, right? So if you have not filed your January return period, it will always be reflected basis the invoice date. So in this example, if you have, let's say there was an invoice dated 1st January and you have actually generated the item number also on the 1st January, then so there is no doubt at all. In GST 1 also you will see this in January itself. But what happened that there was an invoice which was dated 1st January, but you have generated the item number, let's say on 1st Feb. So in this particular case also, this particular document will be reflected in the GST 1 of January month itself. So though it will be reflected on 3rd, but it will be reflected in the January return itself only. But assume that you generated what you have done, you have just filed your January return, like January GST 1, and assume that you filed on 8th Jan. And now you realize that there was some document against which you have not generated the IRA number, which was for the January return period, and you try to generate on 9th, which is after filing your January GSTR 1. So if you do that, in that particular case, this document will not be reflected in your January or Feb return period. You yourself have to reconcile and make sure that this gets added in your next month. So this is what you have to do. But yeah, before filing, it will always be basis the invoice date. So I think this answers your query. And maybe, sir, I guess I could see there's another question from Govind Raju. So if you can just answer this. So his question is, suppose the supplier payment not yet paid within 180 days, and what is the ITC claim status? Any provision available to the customer favor?
See, he has to reverse, if he don't make payment within 180 days, then he has to reverse his ITC claim. Now, GST portal is a funny portal, which I can say. When we talk about it that we have to reverse our ITC, this is the law position. And practically what you have to do, you add this in your output tax liability rather than reversing your ITC. That's the only thing for the customer favor. You want to say that your purchaser has not made your payment, then it is a civil issue. You have to send a legal notice and you have to go as per the legal law provisions of India. GST law is not going to help you. GST law is going to restrict his payment, that he has to revert his ITC. Also, if you are an MSME, then also he has to make payment or disclose in his periodic statement which he has to file with the ROC. That's max I can say.
Thank you.
So
Thank you.
registering yourself with MSME if you are one of them, that can come to your help. GST laws are not going to help you.
Thank you, Abhishek sir. So, since we were talking about the changes which was applicable from 1st January 2022, and I think there is another important change which is in relation to restaurant services. And when this restaurant services is supplied to an e-commerce operator, so we like to understand from you like what exactly is this change, and will this even impact the businesses, especially who are dealing with the restaurant services?
So see what they have said, that in case if the restaurant doesn't have a GST number, then the e-commerce operator would be liable for charging, collecting, paying GST, and that would be at the rate 5%. Now, the problem comes with the e-commerce level. They will collect tax, pay it to the government. Now they have their own e-commerce operator service also. Now, whether these services for restaurant, you see, we all know that for the restaurant services, you are not allowed to take claim ITC. Whether these would be made part of your turnover, and then your the normal services would have any impact of ITC claim. Now, government has come with certain FAQs which have said that no, they would not be considered, and your ITC would not be reversed, considering them as a common service for those services. But food delivery aggregator would be liable to pay GST on behalf of the restaurants which are not registered with GST department. And restaurant services provided with the declared traffic of tariff of 7,500 over and above, that's a separate issue. But I feel that very few restaurants would be there who are not registered. Especially in tier 1 cities, you will not find any restaurant, unregistered restaurant, who would be working these food delivery apps, say Zomato or Swiggy. You will not find anyone. This could impact in tier 2, tier 3 cities.
So, I think
And,
I could.
total what government has claimed that they are planning to get the additional 3,000 crore rupees taxes in next 5 years. So that's not a very substantial amount which government is targeting. With this, government is targeting compliance. They are not targeting revenue with this change.
Thank you, Abhishek sir. So I can see there is another query from Shraddha, and she is asking in case we hold ITC of supplier for return not filed and not reflected in GST at 2B. So how can we follow the condition to make payment within 180 days, or else we will have to reverse the ITC in GST at 3B?
See, once you are not claiming, um, see, once you are not claiming it, then where's the question of reversal?
Yeah.
So you have
So
not made payment to the party. He has not shown is in GSTR1. That is not reflecting in GSTR2B. So how come the question comes for reversal? Reversal comes once you have claimed it. So you have claimed the taxes and you have not made his payment.
So hope Shraddha, this answers like it's simple like whenever you are blocking the payment for your vendor, right? So whenever you're not making them the GST payment, at the same time you don't even claim that ITC. That's the reason, right? You are saving on the interest. So first at first place you have not made them the payment. At the second place you at the same time will also not claim the ITC. And since you have not even claimed the ITC, there is no question of ITC reversal in such case. So this is how you have to take this, and this is how we always comply with the law also. So I think we have covered like all of the query, and here I will just like to explain you like because we all know that clear tax, uh, especially come up with a lot of things which will actually help, which will actually enable the businesses. So we already have our GST platform with us, and along with that, we also have come up with the Max ITC tool. So this actually helps you in actually solving the current problem we have, which is like you reconcile it, you do the payment, the vendor payment. So it will actually help you when to make the payment to the vendor, when to block the payment. And what if, let's say, in the next month, when you have actually seen this invoice in your GST 2A and 2B, you also have to make sure, okay, now you have to make the full payment, because ultimately now you have vendor have compliance. So if your vendor have compliance, you have to claim ITC, and at the same time make the payment to the vendor. So all of this can become a really big challenge if you do one-on-one basis, because you cannot keep on looking into each and every invoice every month and see, okay, hey, this vendors, this invoices are not uploaded, so I have to block it. And next one again, you have to look into the current month, and at the same time, you also have to look into the previous months where the payment was not made, where the payment was made, against which document you have claimed ITC, against which document you have not claimed ITC. So all of this is actually not possible manually. So we always require something which can automate all of my processes, which can actually reconcile in itself every month, and I know, okay, hey, these are the payments, this is due now, against this I can make the payment, and against this document I can go ahead and claim ITC, because that also needs to be automated. And at the same time, tomorrow, let's say I want to see, okay, in January month, or maybe let's say in October month, what was the document against which I claimed ITC, I will be able to track that. So there should be proper calculation trail against the same, that what were the document against which I claimed ITC, what were the document against which I have reversed the ITC, what were the document against which I made the payments and all. So all of this can be automated, and at the same time, you can even keep on having a compliance, or you can have a proper communication with the vendor so that they approach the document on time. So this all can be automated, and with this we have our tool, which is actually known as a Max ITC, and also our GST product, where you can have obviously a great ROI. You can make sure that your vendors becomes compliant, you claim the ITC on time, you have a peace of mind, where you don't have to look into, okay, which is compliant, which is not compliant. So this all can be automated, and at the same time it's a future proof, so that even if tomorrow you receive any communication from the department, you have a handy documents with you, so you can always reply in a one shot of time. So we are already dealing with lot of enterprises, and we also know that if you talk about like how many vendors actually don't upload the documents on time, so this actually impacts your the working capital, and it's around 5 to 7% of your working capital gets blocked. Main reason could also be because you may have a lot of quarterly suppliers, and when you have a lot of quarterly supplier, even though the government have come up with a facility called as IFF, which is invoice furnishing facility, still many of your vendors don't use that. They go ahead and file the GST1 only on the quarterly basis. So if they are not making the use of that, then the main reason is because it's an optional thing for them. Unless you push them, they are not going to use that. They will say, okay, anyhow, it's optional. There's no penalty, there's no interest which is to be levied on this particular transaction, especially when I don't upload on IFF. So they go ahead and file only in the GST1. So that actually results into your working capital blocking if you are a monthly filer, if you have to file both 1 and 3B on a monthly basis. In a similarly basis, there can also be cases where your supplier not even uploaded at all. So if they have not uploaded again, it becomes your loss, right? It becomes loss, and it's a permanent loss because now you're not able to claim ITC at all. So if let's say the cost, like if you say 18% is a GST, so that entire 18% becomes like a cost for you. So if you are dealing, if you are just running in a very small profit margin, so assume if your profit margin is just 10%, so here your cost becomes 18%. So which is again going to be a really big problem. So you have to see that you have to regulate that. So it's important that whenever you're doing a vendor onboarding, if you are having a new vendors, right? It's important that you look into their compliance rating also. Just see are they actually compliant or not, because sometimes what happen if there is a vendor who is a very compliant one, even if he's charging some extra bucks, right? And there is another vendor who is a non-compliant. The vendor who's charging extra bucks can become a more efficient for you in terms of the profitability compared to that non-compliant vendor. Simple thing is assume that there was a vendor who was charging 100 plus GST and is a compliant one. And there's another vendor who says, okay, I'm going to charge you maybe 99 or 99 plus GST, but this is a non-compliant one. So the person who was compliant here, even if he's charging 100 rupees, which is 1 rupees extra, 5 rupees even extra, it's not going to cost you much, because ultimately that 18 rupees you can always go ahead and claim as an ITC. But for the other one who is not compliant at all will become an entire cost for you, which will decrease your profit. So this is something you will always have to look into it when it comes to looking after the vendor onboarding, looking into the vendor compliance rating, looking into from whom you should purchase and whom you should not purchase, unless they're a very critical vendor where you can't replace it. So this is something, and if that's the case, just make sure that you are having that as a part of your cost, so you know that what was your cost. So here with ClearTax, you have a one-stop solution, be it your invoicing, be it your e-way bill or GST filing or ITC reconciliation along with the ITC wizard, the tax analytics reports and the reporting, so that you can always look into such differences. We keep on saying it, hey, I have a difference between 1 and 3B, what to do? So sometime maybe you also have a cases where you may have credit note in some of the state which is more than the sales in that state. So you cannot actually show that, we know in 3B we cannot show negative figures. So in such case also this can be automated. So our tool itself will know, okay, this is something which has to be carried forward. So next month whenever you file, we always say this is something which you have still not came. Now you can adjust it because now you have sales in that state. So all this can again be done. So again, we have a vendor compliance software, the network compliance software. So this will help you in automizing all of your compliance part, be it the direct tax or maybe your TDS thing or maybe your income tax thing. So all of this can be done at a one place. So in case again, if you need a proper demo for this particular tool where everything can be automatically done and it can be automated, so I would suggest to just fill in the form which has been circulated on your chat box, so that our team can reach out to you and can show you the live demo on your own data. So we also have an integration. So because many times we say, hey, I don't want to download Excel and keep on doing that. So we always have an integration with different tools, be it your SAP or Tele or Oracle or Microsoft or even a custom ERP. So we even have the integration with us, so that integrations will help you in avoiding the manual effort which you do today. So this is about our GST product, and we at the same time have a 360-degree customer support. So you can always come in and ask whatever queries you have. You can always deal with that. So because many times we don't understand about certain things, so you can always call our customer care and they will answer you. So I get, and there is also a form which has been circulated on the chat box, so you can always look into this. So before ending the session, I know there is another question from Sayed. So maybe sir, if you would like to answer this query. So he's asking that in case of purchase from SCZ vendor through bill of entry, what should we do for ITC when a bill of entry is not reflecting in 2A 2B, but they have submitted invoice plus copy of bill of entry to us?
The answer is same which Sufi has told earlier, that this is not linked with your GSTR 2B, 2A, and you can claim the credit. But again, you ask them to correct it, because SCZ loss goes on a different way. It would be considered for them. It would be considered domestic sales, and for you, it is equivalent to your import because they are considered to be outside Indian laws. So yes, you can claim the credit. even though they are not reflecting in your 2A and 2.
Thank you.
Any contrary view, ma'am?
No, no, I agree with you completely that we can always go ahead and claim the ITC. So, with this, I would like to thank Abhishek sir. So, thank you very much, sir, for coming over here and taking out your precious time and actually answering all the queries of our users. Thank you very much, sir.